It is early Saturday evening, Eastern Daylight Time. Actually, no, take it back, Eastern Standard Time. And this is the S&P update. I was out of town at the end of the week and couldn't do this at the end of the day on Friday, but I figured, what the heck? No one's going to be doing anything until Monday anyway. So this is being brought to you by FreeChartVideos.com, using time-honored techniques to understand modern markets. To remind you, this video is for educational purposes only and is not intended to be any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your financial situation. And I'm not a licensed professional, just a guy that draws lines on charts. So let's look at the S&P. First off, taking a really long-range look, I just want to remind you, this is the top of the bull market. This is the April high. This trend line, in my opinion, if this were nothing but a bear market rally, this trend line should not have been pierced through to the upside at all. As a matter of fact, actually a more accurate bear market line would be something like this, drawn over this peak and sort of over these peaks right here. And you can see that those were left behind quite some time ago. And interestingly enough, the correction that we experienced back that kind of culminated in the late summer and early fall, that back-tested this line really effectively. So let's just get rid of that now that you've seen it. My point is, if the April high was the only high we were going to set, then it's my opinion that we would not have crossed over this line, because this implies that the market is healthier than what the bears are giving it credit for. Additionally, we've got this large inverse head and shoulders, the measure of which is over 1,300, 1340, 1350, something like that. We've got this small inverse head and shoulders. The target in that is 1240 to 1250. Looking at a 4-hour chart, these lines get kind of goofy when I make that move. Here's that head and shoulder pattern, inverse head and shoulders. There's our neckline. We'll do our measurement again, just so you see it. Depth of the head added on to the neckline, and we're 1240, 1250, something like that. So anyway, these things usually play out pretty nicely, and I still believe this one eventually will. The question has always been, is it going to do it in one steady move up to that level, or is there going to be some intermediate corrective move and then a renewed thrust that would get up there, and probably, if that's the case, even higher? You can see the channel that we had established that has been working for 1, 2, 3, 4, 5, 6, 7, 8, 9, more than 9 weeks. You can see that we got above that channel momentarily week before last. Then things broke down, and on Friday we were below the channel, at least for now, momentarily. Now, guys, every channel that has ever appeared in the stock market has eventually broken. This one could break. If it does, then I would expect to find not resistance, but rather support in at this orange line in the middle 1100s somewhere. I would expect to find hard support at the neckline of that head and shoulders pattern. Let's call it 1125. So I think we've got two levels that should catch prices pretty well if this channel breaks. But You know something? The way this is going, and I'm looking at kind of the relative spacing of these peaks, and I'm thinking, if we get a bounce here, our next move could take us to 1250. If this channel holds up, that's about where the next touch on that top line would be, or it could go up to 1240, 1245, fail, then come back down, then consolidate and move back down to the middle 1100s. So right now, I'm playing it a little safe. I'm going to watch this, and I want to show you another thing. Look at this line right here that I've highlighted. Let's go into a 30-minute view. If you'll recall, those of you who'd been following the market for about a week and a half, the S&P really struggled with getting over 1195. It tried it here, sold off. Tried it here, sold off. Tried it here, couldn't do it. Tried it here, tried it here, tried it, backed off, then made it. So, and look where it bounced. So prices on Friday bounced about where they should have. By the way, this line moved on us when I went into this view. That's actually more accurate right there. So sometimes, by the way, when you have a slight violation on one side of a channel, that creates a little bit more selling interest when things begin to come down. And so there may be a good reason why the prices got down a little bit lower than this channel. Think of it this way. You've got somebody up here who bought high, 1225. And when things start to head south, there's just a little bit more panic, just a little bit more selling pressure. So it's going to come down a little bit further. We've seen this before in other patterns, symmetrical triangles. You may have a little false breakout, and then a pull down back below, and then it gets back into the pattern. So think of it a little bit like a pendulum. As the prices swing back and forth, if they swing a little bit further one way, they may swing a little bit further coming back in the opposite direction. We need to watch the market very closely on Monday. And again, if you're caught in this market and we do end up with some downward pressure on Monday, maybe clearly breaking this support line, I want to remind you that there's a strong tendency for back tests when channels have been broken. So I'm not saying it's guaranteed, but I'm saying that if this were to break down, and let's say we get into the 1180s, and then prices begin to rally and then come back maybe to over 1200, 1205 or something like that, then or 1204, you might look at that point to say, well, is the market going to encounter weakness here? If it starts to look weak, that might be the spot to get out. I'm not saying that I don't really want to give investment advice, but as far as charting goes, often you will have a break of a channel and then that back test, and that gives you a good opportunity to save the situation and to change your position on the market. Anyway, this is the S&P update. I really didn't like what I saw on Friday. I was out of town actually shooting a job. I'm a photographer, and fortunately, I was making more money than I gave up with the market the way it was. And another thing is, we can look and see this little pattern here, maybe. And it's possible, if you look at that as a continuation triangle, that this depth may have been about what's implied by that. So just keep your eyes on it. It wouldn't surprise me to see this hold. And if it does, then I would look for a good solid move towards the 1240, 1250 area. But if it breaks down, we got to go someplace else first. I know that's kind of goofy, but you see the channel. This channel should tell you what to do. That's the value of charting. Charting is not getting an absolute 100% lock on anything. That's for sure. But what it can do is it can help you to understand what potential moves might mean in relation to the larger picture. In other words, if we rally and we stay in the channel, then be looking for a touch on this top line. If it gets down below this channel, clearly on a breakdown, then look for a potential rally back up to back test this line, at which point you would probably want to get out of your long positions. Anyway, hope this helps. If you get a chance, I would also really appreciate it if you could get over to the website and freechartvideos.com. Right now, this website is completely supported by traffic and the advertisers who advertise on the site. So I need all the traffic I can get, and I would appreciate it if you get something out of this and you think that this is worthwhile information, that you pass it along to your friends and help me get this word out that there's somebody out there who's using some old school chart techniques that actually work. Take care.